So you want to get into real estate, right? But maybe you don't have, hundreds of thousands of dollars just sitting around for a down payment. Or maybe, just maybe, you're not thrilled about the idea of being a landlord. Well, good news. Today, we're breaking down how you can build some serious real estate wealth without ever having to pick up a paintbrush.
Yeah, getting into the property game, it's one of those classic, reliable paths to building real wealth. But let's be honest, the traditional way of doing it, it can feel completely, totally out of reach for most of us.
All right, let's just get real for a second. There's the dream, right? You've got this awesome portfolio of properties kicking back while the passive income just rolls in. But then there's the reality. And that reality often looks a lot like getting a call to fix a leaky faucet at 2 a.m., dealing with, let's just say, difficult tenants, and trying to scrape together a down payment that feels absolutely massive. But what if I told you there's a better way? A way to get all the good stuff from real estate investing, the appreciation, the income, but with absolutely none of the headaches. Well, that's exactly what we're diving into today. Okay, let's kick things off with option number one. This is probably the most popular and honestly the easiest way to get started. We're talking about real estate investment trusts, or as you'll hear them called, REITs. So, what in the world is a REIT? Think of it like this. It's basically a company, and its entire job is to own and operate real estate that generates income. And the cool part? You can buy shares of these companies on the stock market, just like you'd buy a share of Apple or Google. Here's the best way to think about it. It's kind of like a mutual fund, but instead of stocks, it's for buildings. So just like a mutual fund gives you a tiny piece of a bunch of different companies, a REIT gives you a tiny piece of a whole bunch of different properties. And we're not just talking about a couple of houses here. Oh no. REITs own massive, high-value commercial properties. We're talking apartment buildings, giant shopping malls, huge office towers, even the data centers that are basically running the internet. So when you buy just one share, you instantly become a part owner in this incredible, diversified portfolio. Okay, but here's the real kicker. This is the part you're going to love. See this number? 90%. By law, REITs have to pay out at least 90% of their taxable income back to their shareholders. And what does that mean for you? It means dividends, it means a powerful and pretty reliable stream of passive income. All right, moving on to option number two. This is the modern way, the tech-savvy approach that has totally changed the game, especially for smaller investors. I'm talking about real estate crowdfunding. And the way this works is actually pretty simple. You, me, and thousands of other people can all go onto a platform online and pool our money together. Then that big pile of cash is used to fund some huge, large-scale project. And if the project does well, everyone who chipped in gets to share in the profits. Simple as that. And this is the real magic of crowdfunding. It gives you access to the kind of deals that, not too long ago, were completely reserved for the ultra-wealthy. We're talking about those sleek, high-end commercial projects that were totally off limits unless you were a big-shot institutional investor. Now the door's open for everybody. And get this, the barrier to entry, it's basically gone. I mean, forget about needing a six-figure down payment. On a lot of these platforms, you can seriously get started with as little as $10. 10! It's completely democratized access to this stuff. Okay, on to our third and final option. This one is for anyone out there who's thinking, I want the most diversification possible with the least amount of effort. If that's you, then you're going to want to know about real estate ETFs. Seriously, if you thought REITs sounded easy, ETFs are like the ultimate hands-off approach. It's truly the set it and forget it strategy. You invest and you get instant exposure to the entire property market. So how does that work? It's actually super simple. An ETF is just a basket that holds a whole bunch of different REITs all in one. So instead of you having to research and pick individual REITs, you just buy the one ETF and bam, you instantly own a small piece of dozens, maybe even hundreds of them. And that's why they are so powerful. It's all about spreading your risk. With just one single investment, you are immediately diversified across all these different sectors: residential, healthcare, industrial, you name it. So if one area of the market is having a tough time, it's no big deal because the others can help balance it all out. All right, so we've just covered three really powerful but also really different ways to invest in property without ever having to be a landlord. So now let's just recap and put them all side by side so you can figure out which path might be the right one for you. Okay, let's break it down. If you were looking for something that's easy to get into and offers those reliable dividend checks, REITs are going to be your best friend. Now, if you want a shot at those exclusive, big-time projects and you love the idea of a super low starting investment, then crowdfunding is definitely the way to go. And finally, if your main goal is just maximum diversification with ultimate simplicity, well, then you're looking at real estate ETFs.
You know, the biggest takeaway here is pretty simple. You don't need to be a property manager to be a property investor. Real estate is this incredibly powerful tool for building wealth, and the best part is, it doesn't have to be a full-time job anymore. So that leaves one last question, and this one's for you. Which of these landlord-free ways to invest gets you the most excited? Are you drawn to the steady dividends of REITs, the exclusive access you get with crowdfunding, or that super simple instant diversification you get with an ETF?